Welcome to the Aksarben Mortgage Podcast, hosted by John Mortgage Major, powered by VRLY. This is where we interview top mortgage, real estate professionals, industry insiders, operational managers, and thought leaders from around the nation, diving into hot current topics to help you experience your good life.
Well, here we go. What's up, everybody? It's John, lead mortgage advisor for Aksarben Mortgage, and welcome back to the Aksarben Mortgage Podcast. Today, we have the OG, the GOAT, the Tony Robbins of the mortgage industry, is American author and speaker. I mean, we've got high trust selling right here. Todd Duncan, thank you. Thank you for coming on today.
What up, John? It's good to see you, man. Good to see you.
So good to see you too. And like Todd, I'm on a quest to help people win in business and in life, because when you do that and you trust yourself and you trust your relationships and you trust your business, and most importantly, trust your future, you set in motion a universal of possibilities, and that journey starts now. Todd, does that sound familiar a little bit?
It sure does. Yeah, I think that's on one of our websites, but it's like one of those things that people don't really gravitate towards immediately understanding that one of the biggest hurdles in business and life is self-trust. And it doesn't mean you wake up thinking you're distrustworthy or that you're dishonest. It's just the psychology of confidence. And so, when you have trust as kind of that guardian, that the guardrails or the speed bumps in your life, and you try to really stay focused within those boundaries of trusting yourself and trusting your motives and, trusting your referral partners and trusting your borrowers and then exuding and creating enough value where people trust you and refer you. And it's the biggest word in the world right now. It's trust. And we feel really blessed, as I was telling you before we went live. This is the 20th year anniversary celebrating the first printing of High Trust Selling in 2002, and a couple million people in the world have read this book, and it's in 21 different languages. And just feel lucky that it was written. I wrote it with the idea, if I died tomorrow, would this book be relevant 30 years from now? And that was my process. And so I'm happy to say that it is. So good to be
timeless.
Yeah, can't wait to add value to your tribe, and it's going to be a sweet time together.
Oh man, I feel like a little kid in a candy store here. I'm like, no, but that book, I mean, if you're in sales, high trust selling right there, you got to read it. You really do. I mean, I mentioned timeless. I mean, the principles, and that's, you mentioned in the marketplace we're in right now, the core principles, yes, I mean, is social media and the way you present information, one-to-one, one-to-many, a little bit different. Absolutely. But, your principles are at the core of human connection.
All right.
And, if you don't mind shedding a little light on what you're seeing, I mean, we've not seen a housing market quite like we're seeing right now. And, there's a lot of noise and they don't know who to trust. And so, sharpening our skills as a mortgage advisor professional has never been more important. I mean, you start getting on Housing Wire, Mortgage News Day. I mean, people are getting laid off. I mean, it's very real in our industry right now. So, I mean, we just kind of touch on what you're seeing on your end and, what's most important.
Yeah. Well, I think the first thing I'd like to say to everybody is, this might be for many people in the mortgage business, your first encounter with a weird market, like a wickedly weird market, right? Especially coming off the last couple of years where rates were so low and refinances were so plentiful. And, short of cash out refis today, there's not many people in line to get a refinance. And we look at the market, we look at what's happened to mortgage lenders in the first quarter of this year. We look at losses Q4 of last year. We look at losses mounting Q1 of this year. And that is part of the cycle. To make sure, John, everybody's familiar with why I think I'm kind of an authority on moving and pivoting through weird or difficult or new markets that feel different is I grew up in a weird market. I got out of college and I was 23 years old, and I didn't know what I was actually going to do. And just to save time, I will tell you that I had an encounter with some friends of my parents. The guy happened to be my little league coach when I was 8, 9, 10, and 11. And he happened to own one of the large real estate companies on the West Coast. And we were at a family barbecue after college, and it was July 4th of that summer. And he said, "What are you going to do with your life?" And I said, "I'm not sure. I've got, a business degree. I got disciplines in finance and in marketing, and I'm just not sure yet." And he said, "You ought to try the mortgage business." And I go, "Okay. I mean, I'm familiar with it, but why you? And other than the fact I love you and you coached me in baseball when I was a kid." And he said, "Because we own a mortgage company, and you're going to be able to have business almost immediately, because we've got close to 3,500 agents in Portland, Washington, and California that are part of this brand." And I said, "Okay, it sounds good." And so he says, "Why don't you meet with the guys over at the mortgage company next week, and let's see where it goes." So I was really intrigued with the president, really intrigued with the guy that was the branch manager at that time. And they offered me a job, and I said, "Sure." And I got 26 real estate offices to call on, and they're probably 26 miles apart from each other. And I started South County in Orange County, California, and that was San Clemente. And I worked my way all the way up to Anaheim. And I was four weeks in, and nothing was happening. And so I went to the beach, which just seemed like a great idea. It's a lot less anxiety ridden than making calls on realtors that don't have anything to share or refer at that point. And I was such a neophyte. Anyway, I went to the beach, and it dawned on me that a friend of mine, his dad owned a real estate firm, and it was not competing with the real estate firm that owned the mortgage company I worked with. Long story short, I sat there for about 3 hours. I watched, I think it was like 21 title reps and loan officers come through the front door. And towards the end of the day, around 4, this guy walked in. He had a beautiful suit on, a leather folio, and he introduced himself. And he said he had an appointment with this realtor. And then they disappeared for 45 minutes. I think I called on 3 offices in 45 minutes. So to put a little kind of reality to it, and there's people watching and listening to this right now, John, that have never made a call on a real estate office. And, it's a new kind of day, and yet it's not. But what I learned from that guy is don't make cold calls. I learned from that guy that you had to have value in advance of asking for an appointment. And if you had value in advance of asking for an appointment, you had conveyed trust, because you cared enough to create value and not just go for the business, right? And so here's where it all came together and why this book became what it became. He said, "Before you really, really go any further, I need you to make a decision." And I said, "What's the decision?" He said, "You got to choose between transactions and relationships." And I said, "Okay, why?" And he looked at me and he said, "Because transactions will make you a living, but relationships will make you a fortune." And right then and there, my entire world pivoted. And within 4 months, I was rocking and rolling. And within 12 years, with 13 realtors, we had funded almost 6,000 home loans. And it was all based on relationship. And I understood that you can go wide and shallow. You could have 20 realtors give you a deal each, or you could have one realtor give you 20 deals. And that really birthed the idea of more from less. It birthed the idea that if you try to be everything to everyone, you're not going to be anything to the right one, because your value is kind of diminished. And so the maximum value to the fewest people became my recipe. And, I think everybody can do the math real quick. If my agents and I did about 600 real estate transactions a year, and it was based on this, then you would be compelled to understand that in today's market, the same thing matters. So just real quick, my market when I started, 20% cost of funds. Prime was 20%. FHA, VA loans, 16.5%, 17.5%, 3, 4, 5 points. Piggyback first, second, 18.75%. Unemployment, 13, consumer confidence in the tank. Nobody was thinking anybody would do anything because we were in a recession, and we're going there right now. I don't know when, I don't know how deep, but if you watch the news, which I don't very often, they're comparing today as a market, inflation rates, all that's going on, they're comparing it to 40 years ago. They constantly say, this is the worst we've seen in 40 years. And you've heard that. And 40 years is when I did my first loan. And that's the market everybody's talking about. So you look at today's market and, 5.25, 4 7/8, whatever 30-year fixed rates are. It's not the market. It's the value we bring in the market we find ourselves. And so, the glass is half full. You have to look at, it's sad, layoffs. There's a cleansing. I was on a real estate show yesterday, and NAR's forecasted that 30% of realtors in America will not have a job in the next 12 to 36 months. That's a lot. That's like 300,000 people. And you look at mortgage companies laying off right now. You look at the forecast that 100,000 people might not have a mortgage job this year that had one when January 1st rolled around. That's hard to stomach, right? And so the market demands, no matter what it is, it demands value, and it demands trust, and it demands perspective. And the perspective is, this is going to be a good market. It may not feel like it, but if there's, 20,000 less loan officers in your state, or maybe 100,000 less loan officers in America, you get a cleansing that can be really, really good. But I've watched top producers do three things right now. They change their perspective. What's good about this, and how do we through the power of choice and the power of innovation, how do we up our game? The second thing is, what value can I provide right now that I've never provided that is better than any value proposition that I hear anybody offering in my location as a local lender? And then the third thing is, how good are my skills? And, there's changes right now, and the changes are dramatic. Listing volume in my county of millions of people is 70% off from a year ago. Prices have fallen on homes. Contracts have fallen on homes. Contracts have fallen 4 months in a row. And February to January, contracts fell by 4.1%. A $2,000 mortgage payment 6 months ago could buy you a $440,000 house. A $2,000 mortgage payment today can only buy you a $360,000 house. So we're watching a market that's weird, right? But it doesn't matter, because you get to choose your attitude, you get to choose your value, and you get to choose what you bring to the market. And to finalize this, and then you can take it anywhere you want, I chose attitude. I chose my perspective. Everybody's thinking the sky is falling. So I've got to be the purveyor of a new idea. The sky is not falling. In fact, it's opening up. And the more and more people think, gosh, we're in a recession, nobody's going to buy, nobody's going to sell, the more and more opportunity I have as a positivity force to come in and say, sure, they will. We just got to find them. We got to find them. And so I had a 3.5-inch button made up. It's a green button, and on it, it said, rumor has it we're in a recession. I'm not participating. And so when I started calling on realtors, that was my message. You can believe the market's falling, or you can believe that you don't have as much competition and go out and slay it. And it's a choice. So that's the commentary right now. And, I don't know how many more times the Fed's going to hike rates. I don't know, 3, 4, 5, 2, I don't know. But I do know I can bring a lot of value no matter what the market is. And so I think that's my perspective right now.
Yeah. Yeah. A lot of truth right there. Because people, whether it be divorce, diapers, diamonds, the list goes on. Real estate will continue no matter where rates go. And yeah, maybe it does bring a few buyers outside of the market. But it's still going to be happening, but it's quality over quantity. And to your point, you need to make sure that you're focusing in on the right people and having the right conversations, and asking the right questions.
And you hit on something right now, and being a graduate of the High Trust Sales Academy, how much weight we put on what you just said, asking the right questions. And that would be a question, if you're listening, watching, that I would write down. Am I asking the right questions? And one of the things I'll tell your audience, your tribe, your friends, the people you're trying to help win, is the idea that you need to reinvent how you make an impact in the market. And that doesn't mean you got to go into like your innovation garage and, redo whatever you're doing. It does mean though, that you want to think differently than you've ever thought. And, one of the quotes that I've used my whole life is by Thomas Dreyer. And he said, the life that we live is the life within the limits of our own thinking. And so we have a choice in a market like we're in right now to think differently, to think bigger, better, stronger, healthier, wealthier, faster. I mean, we can take that ER suffix, and just take it to whatever extreme we want. But the thing that I would give permission to everybody to think is it doesn't mean you have to do more. What it means is you have to do less that is more impactful. And so we are huge on this idea of, do you have one question that before you talk with a borrower, or one question before you talk with a potential referral source, realtor, builder, financial planner, wealth manager, insurance, CPA, physician, doesn't matter to me who it is. Do you have a question that the one question is going to create enough conversation to close the deal and to start the relationship? And people scratch their head and go, that's impossible. Well, no, it's not. It's impossible if you think it's impossible. But what that leads to, and where you need to lean in, is it doesn't matter how many questions you ask. And if you're asking the wrong questions, the more questions you ask, the more wrong the information is, the less valuable it becomes. And so when you peel it back and you go, I could just really ask one. And I'll just give you a story that happened in the last couple of weeks. So middle of January, we did a webinar for a mortgage company, and they've got, I think, 300 LOs. And we introduced the concept, and everybody can have this for free, John, that's in your world. It's our Talk Less, Sell More white paper. And the hypothesis in the white paper is you can talk yourself out of a sale. And the more words you use, the more likely the relationship is not going to engage. And the more questions you ask, the less depth you will have in any one answer. And you're not going to get the pivot point where trust takes over tension and the borrower or the referral prospect says, oh my gosh, if we could do that, sign me up, I'm in. So I was talking to everybody and we kind of laid out, what's in this white paper. And I said, so here's your assignment. In the next 30 days, all of you that are LOs, I want you to go out and with at least 5 buyers, minimum 10 max, I want to see if you can ask one question. And when the answer is done being given, the deal is secure. And people are going, one question. I said, yeah, one, just, you got to try it. And then a month from now, we're going to get back together and I want to evaluate what happened. So we get back on middle of February and I asked people to put their hands up and I call on this guy, Tim. And so I said, Tim, so what are you going to report on? A referral partner or a borrower? And he said, borrower. And I go, great, tell us the story. And he said, I had a husband and wife that called from Anchorage, Alaska. They knew a realtor in town that I do business with. And we ended up jumping on Zoom and having a conversation. They were going to move from Anchorage down to Portland. And so he said, I had thought long and hard about this couple. And he said, all first-time home buyers. And I decided that I would ask the question that I felt would be the most valuable for that profile of a borrower, right? So he's got the husband and wife, and within the first minute or so, a little bit of soft talk. And then he goes, so let me begin by just asking you one question. So John, that kind of sums it up, right? Let me begin by asking you just one question. Big pause. And then the question was this, and he paced it about how I'm going to do it. He said, what would it mean to you guys to own a home? That was the question. Paced like that. One question. As he tells the story, the wife started crying immediately and the husband followed within about 15 seconds and they were sobbing on Zoom. And he said, what feeling are you experiencing right now? That's a great question. Not what do you think, but what feeling are you experiencing right now? And they both stammered through it, but essentially the wife began by saying, if we could own a home, we would be the first couple in the ancestry of our family to own real estate. That was it. And Tim looks at them and says, wow, the first. And he just parked there for about 3 minutes. So nobody in your history as a family has ever owned a home. No. We hear stories all the time. I'm the first one to go to college for my family. We need to understand there are people that are going to say, I'm the first person in my family to buy a house. And so 2 minutes into it, he goes, you know what? I'm going to devote a lot of my time starting this moment to make that dream come true. Are you ready to go? And they said, yeah. So one question converted the borrower to an application, to a purchase contract, to a closed loan, and they now own a home. One question. And so the talk less, sell more theme is stop asking so many questions. If you don't get the emotion going by asking deep centered questions around emotion, it's going to be a price war. You're going to be outbid. You're going to be outquoted. You're going to have liars and cheaters and stealers and thieves that try to make their deal look like it's a better deal. And, it's always been emotion or economics, and if the emotion's deep, the economics matter less. And if there's no emotion, the only thing that matters is the economics. And that's a war right now nobody wants to fight.
No. Goes back to your mortgage is 90% emotion, 10% math.
Absolutely. 100%. And by the way, this kind of thinking disrupts the market, because any person that's watching, listening, or downloads that playbook can say almost every lender around doesn't go where I'm about to go. I mean, think of that, John. Think of that setup. Almost every lender in town does not go to where I'm about to go.
Wow.
And then the people just sit there going, whoa, this is going to be interesting. And I can just add on to that. They seem to care more about getting your business than they do complimenting and helping you with your life vision and skills, of which a mortgage is part. So I'd like to begin on a different note, and I would like to ask a question, and the question out of the High Trust Sales Academy playbook is, help me understand what's important about owning a home to you, or help me understand what's important about a home mortgage to you, but it's always got to be what's important about. And when we set it up, what would it mean to you? What's important about? I could say to that couple that we just used as an example, what's important about owning a home to you? It's not as good as what would it mean to you, but what's important about owning a home to you would probably generate the same response. Mm-hmm. We'd be the first couple in the history of our family to own a home. How would that make you feel? And now we're in the emotion, right? So it's a big deal. And I think the more and more I watch people in this business thinking that technology is going to be the play, I say, no, it's not. It's going to support what we do. It's going to streamline, labor.
Support the people.
Yeah. And efficiency. And it's going to make processors and underwriters differently positioned in roles. And some of those roles are going to evaporate, just like the AT&T operator did 25 years ago, but we're still going to have human beings that need to trust lenders, and we're going to still have ops teams that need to work in sync with sales teams. And we need to make home ownership a dream that comes true for everybody that we walk, in their path. And that's the beauty of high trust. So,
yeah. Well, yeah, I mean, price is only an issue in the absence of value. And if you're not providing enough value from an extreme ownership standpoint, you are going to get shopped more than you would have initially.
And that's a heavy thing for everybody to understand that you just said. And you do have to make that choice. There's a book I read 25 years ago. It's called The Discipline of Market Leaders. And what it said is you have to choose your value proposition. And I think in a very simple way, how you set the podcast up is being a mortgage advisor. That's not a new idea, but it's an idea that still 80 to 90% of the industry does not really fully understand what that means. And when you finally get the idea that advice and price are always going to compete, you got to understand you can't be both. You can't be great customer experience and the lowest price. You just can't. And you could be the highest price with massive advice, tens of thousands of dollars in advice, and you could win the deal. You could win the relationship. And so they're always going to fight each other. And I don't think enough mortgage professionals, and quite honestly, I don't think enough realtors are equipped right now to handle that advice piece. I think there's a lot of market pressure and every deal matters. And we tend to lose the disciplines, or we never learn them, that actually creates that kind of advice-centric relationship. And, you know, at a very high level, everybody needs to understand that if you have a chance to work with a buyer, a seller who's buying, a buyer who's selling, or both, the number one thing people face in America, and you just know this right now more than ever, and I've been saying it for 30 years, is financial stress. And so a true advisor in the mortgage space is going to come alongside a borrower and help them win financially, period. Mortgage, debt management, planning, mortgage efficiency checkups, recommendations. You got a 25-year asset. And if you have thousands of those assets, then you make millions of dollars as a mortgage professional. It's pretty straightforward.
Yeah. It goes back to the client for life transaction or relationship.
Right.
And that's where the technology, I mean, HomeBot, for example, I mean, there are tools that it's a great way to stay in front of them on a monthly basis for them to be aware of where things stand. But that doesn't make up for the conversations and asking them pertinent questions about things that matter most to them, because everyone's situation is different.
Correct. And I think we need to be careful of, messaging today. And I don't know how far down this path we want to go, but I was in Phoenix 3 weeks ago, and I did a program called High Trust Selling in a High Tech World. And it was a really high-end event for about 80 professionals in mortgage and wealth management. And, one of the things that I think became very, very uneasy for people really, really quickly is how messed up auto marketing has become, and how you used the word noisy at the start of our time together, how noisy the market has become. And the value has to be in what you send. And it's not about sending more. It's about sending less that lasts longer. And so I began to paint a picture there, and HomeBot, I know the guys that founded that. It is most definitely one of the valued resources that could be sent out on a regular basis. And so I want to honor that. But I also want you to know that just because we send it out doesn't mean that we have a relationship. We get brand familiarity, but it may not be that excites or entices action on behalf of them just because they received it. What would make it more valuable is quarterly phone calls, or semi-annual, phone calls twice a year, or, by any stretch of the imagination, at least once a year. And I think what ends up happening with people in the space is they don't understand the value of that asset. And we know if you have 400 borrowers, and in 5 years, all 400 borrowers are able to give you at least a combo of 4 loans. Maybe it's a repeat, maybe it's a buy-up, maybe it's a build, maybe it's a refi, maybe it's a referral. And each one of those commissions is worth $3,500. That's $14,000 in 5 years per person. Do the math, take 400 times 14,000 and look at what your income would be per year just by loving on the people that have already trusted you enough to let them move into a home. And we miss that completely. And we over automate our marketing, and we already know there's too much digital noise in the world. So we gotta, you gotta be different. And I had a call yesterday with a company that is the result of a 31-year relationship that I have with a very successful entrepreneur in Australia. And I can tell you right now, without any hesitation, if I had not stayed in touch with this guy every single year, I probably would not have the relationship with this company that is the biggest media company in Australia for lending, real estate, and law. And, I can point right back. I go out of my way. I've got almost 5,000 birthdays in my phone, and I go out of my way to record customized personal videos, 60 seconds or less every day. And some days it's light. There might be 2. Some days it's heavy. There might be 20. But if I can do 20 videos and 60 seconds each, and you just think about that and think about the value when you get to watch something from me that is personalized, that doesn't involve any technology except reminding me to make the call. I mean, I'm doing this as a business owner to other business owners. And the only reason I'm doing it is because when I was a loan officer, I did it with my realtors and I did it with my borrowers. So, if you're not in touch, you're out of touch.
Mm.
And if you want your clients for life, there's a mandate. You must talk to them during their life. And if you do that, then you can have more and more of your income going to residual rather than earned. And I think that's where most loan officers are in trouble. If they stopped working tomorrow, they'd stop making money. And you got to get the residual income going. You got to get, 7 out of every $10 have to come in from labor previously put into the business. And that's why the database is and will remain forever probably one of the more important assets that a salesperson can have. And this speaks to realtors as well. And anybody, financial planners, anybody. You're not in touch, you're not in touch, you're out of touch.
Why do you think so few nurture their database so well?
Because I think that here's the impediment, I believe. I believe most loan originators in their mind don't ask for referrals because they either feel uncomfortable doing it or they haven't created enough value where they have confidence to do it. And so we take a look at, we'll take a look at somebody from our elite group, a guy named Wally, and Wally's in Texas, and Wally, and Wally has, from the time that there's a first contact with a borrower to 2 weeks post-closing, there's 7 strategic spots that his team asks for referrals from every borrower. And there's a reason why he does that. He does it because he's blown their mind from an advice standpoint. He's created a lights out customer service experience. He has like a tick under 100% 5 stars. He's got online social proof and he's fun to do business with. And so when you look at him and this team Wally, having grown their database from probably 3,500 people 3 years ago to 20,000 people today, it's because they're doing that. And he's paying attention. And this is what I would say to everybody: pay attention to the scope of influence that your applicants have. It could be a solopreneur that's got just a single business and maybe there's not much influence in the company because it's a small company. But if you're a solopreneur, there's a chance you might be involved in a group of other business owners and you might get together for breakfast every other week to talk shop, that kind of thing. Or like he did on an airplane ride from California back to Dallas 3 years ago, he sat next to a guy that was the audit partner for one of the largest accounting firms in Texas. And the audit partner had 2,200 physician clients. And Wally just got to sit next to that guy. It wasn't even part of the plan, right? But he knew that if he could create a high trust relationship with a guy on an airplane that had 2,200 physician clients, that when they landed, there could be a next action. And we got to pay attention to that. So I think you need to get into the mindset that asking for referrals should be an honor. It should be something that you don't do with any hesitation or any trepidation. It should be so natural. And it's like, watch. So my transaction coordinator would make a phone call at 24 hours post application, 7 days, 14 days, 21 days, and 30 days, assuming that we had an escrow closing within 45 days or less. Every time she got on the phone with the borrower, at the end of the conversation, the question was, so great to talk to you and get caught up. How are we doing for you? That's it, right? How are we doing for you? And when a customer would say, oh my gosh, you guys are so good. It's so amazing. You know, last time we got financing for a home, it was a train wreck, brutal. Yeah, you guys are doing great. Keep up the great job. Well, what is that code for? Who do you know that may be buying, selling, refinancing, or investing in real estate in the next 6 months that you would like them as your friend to have an experience like you guys are having? We'd love to contact them with your permission and see if we can forge a relationship with them. That's all you have to do. And so you ask a natural customer service question, right? And hopefully you're not going to get 10 people in a row go, you guys suck. Because then you're not going to want to ask for referrals. Anybody we talk to? But if you're building if you're building the culture that we're helping you win and we're doing it at scale and you're happy, why wouldn't I? So that's the answer. I mean, and I'm just telling you right now, and let me see if I can just hit everybody with a baseball bat in their head. If you get what John and I are talking about right now, you could do in 10 years what most mortgage people take 30 or 40 to do. And that's a big deal. That is a big deal. And why be one and done? You know, why have 100 people here that you did loans for last year, and now you got to find 100 people this year? Why not just have the 100 find you one more each? What would happen if 100 people gave you one? That's a lot easier than one person giving you 100. And so every borrower becomes an asset for you if you nurture them. And if you understand this, why wouldn't you want to nurture them? Why wouldn't you want them to help them stay out of financial stress and distress? And that involves mindset and then skill mastery. You gotta be valuable. You gotta add value. We started off with that.
Intentionality.
Yep. It's important.
Oh man, it's huge. Now you got my wheels turning even in our practice. I mean, that's the thing. It's excellence over perfection. There's always things you can be doing better. And that's what I love about this industry. It's humbling, especially when you go to the High Trust Sales Academy and you meet these individuals that, have completely bought in and they're consistently providing that value at the highest of levels. And it's motivating too. I mean, it's like, it's doable, but you got to buy in and it's one day at a time. And each opportunity is a potential client for life if you do it the right way. I remember
100%. Yeah.
Reminds me too. I mean, I think even because I've had issues in the past, just mentally asking for referrals, but I know you had mentioned even, just setting things up a little bit better and having expectations in regards to, what is it that you expect from us from now until the time you move into your home, for you to feel 100% comfortable referring your family and friends and colleagues to us. And when you ask those questions and you listen, now we know what they want, because not everyone wants the same thing.
Right.
And as long as we communicate that well to our team, and then we have those touch points, we can then continue to see if we're meeting and exceeding those expectations. And I think no matter what you're doing, I mean, the better you set those expectations from the get-go, the more confidence, momentum you're going to have to ask those questions again and again.
And the better off your team will do. So you just set something up that is literally a grand slam. Understand, if you're watching, listening, understand your action plan here. Your action plan is to exceed the customer's expectations. You've heard that a million times. Here's the problem. You can't do it if you don't know what their expectations are, and your team can't do it. So I'm going to take you all the way back to 40 years ago. We had physical loan files, right? And we designed the cover of the physical loan file to have a lot of pertinent information. One was the realtor's core values and their highest value needs, the listing agent's core values and their highest value needs, or the builder's core values and their highest value needs. And then the borrower's top 3 expectations during processing. And they, there's maybe 7 or 8. Once you got to 7 or 8, it's just different orders. But if you don't know what the top 3 expectations are, you can't exceed their expectations by design. You can try to blow their mind, but if you give labor over here to something that's third important to them, instead of giving labor over here to what is first important to them, why would you do that? You're better off understanding this is most important, this is second most important, this is third most important, and blowing their mind on number 1 and 2, and maybe not disappointing them on number 3, or having number 3 just be what everybody else does. But if you don't know that, and your team doesn't know it, and your LOA doesn't know it, and your transaction coordinator doesn't know it, then how can you do it? You can't. And John, it seems like just such a, what do you expect? Great. We're going to blow your mind. Now, the only thing about that you can't do is lie.
Right.
If you know it, you gotta blow their mind. And if you don't, yeah.
You told me what you wanted.
Yeah. Yeah. So it's a good lesson to learn fast for everybody.
Yeah.
Yeah.
I love this stuff.
It's fun.
So good. It's so good.
Rich.
Very rich. So we're last day of March, quarter down. What's, what we still have 3 quarters to go. Granted, obviously, next 30, 60 days, are crucial to anybody in our profession, to be able to make up potentially for lost time, depending on what marketplace they're in and how, the year started. But, and I feel like we've touched on it a lot too, but maybe to reemphasize anything in particular, which obviously, the Talk Less, Act More, make sure that you take a look at that. So thank you, Todd, for providing that value. Because I am a part of Todd Duncan coaching. Shout out to Janelle Nicholas out of Iowa.
Janelle.
Coach Janelle. She's great.
That's awesome. Yeah.
And so, and you have your 30th anniversary coming up here in California, and that's in October, right?
Right. October 11th through the 14th, we are celebrating the 30th anniversary of Sales Mastery. I introduced this event to the industry in 1992. I had a vision of serving literally tens of thousands of mortgage professionals with this idea of mastery and what really is that? What's it feel like, look like? And so we've been assembling, thought leaders and business innovators and putting panels together of different segments like first-time home buyer and then social media and this, that, and the other thing. And it's the longest running event in the mortgage space in history. And that's privately owned. And you look at that and you go, wow. And first of all, I pinched myself because I think that I started it out thinking, I might do this for a couple of years and see what happens. But I had 297 loan officers the first time I launched Sales Mastery, and now over 150,000 people in the mortgage space have attended it, and millions, tens of millions of homeowners have benefited as a result of it. So we're going to go big this year, 30th anniversary. And but I don't want to. Yeah. So just come to toddduncan.com. You can get all the downloads. We have a high trust interview guide. We have the Talk Less, Sell More white paper. You can see the discounts on Sales Mastery. It's going to be a barn burner for 4 days. But let's go back to Q1. So Q1 is ending. What do we do going forward? We end with what we started with. Change your perspective, increase your value, sharpen your skills. So what I would probably focus on if I were in the business right now is anybody that I call a business partner that for whatever reason in Q1, I haven't just really focused on. I would set the goal right now. If I were a loan rep by Monday, whenever you listen to this, the next Monday, I would set business reviews up with every person that I think I want to finish the year with. And I would take the Talk Less, Sell More questioning innovation. There's 6 different question categories. in the Talk Less, Sell More that are add-on to the high trust interview. So the interview is part core values, and it's part, what are your expectations as we process a loan when we're doing business together. And now we've added 6 categories of additional questions. You don't use all 6, but like if I have a business review with a real estate partner, and we've been doing business together a couple of years, and I haven't checked in. I want to sit down. I want to go, hey, Debbie, I know we haven't spent any one-on-one time like this year so far, but kind of feels like the industry is getting a little bit rocky, and I just want to make sure I care about you, and I'd like to just kind of maybe dive into a couple of quick questions where maybe we could formulate an action plan to make sure we both finish the year strong. Would you be open to that? And of course they will, right? So then there's 2 question categories. One is present and one is future. You could use either one of those. You could even use fear. There's a fear category, but let's say it's present. So given the fact that 90 days are behind us right now in your business, what are 2 or 3 of the things that you need to focus on to finish strong for the balance of the year? Okay. And whatever they say, dig deep, find out why that's important, find out what validating that would look like, and then go after it. I could ask a future question. I could say, as you begin to think about finishing this year strong, but more importantly, focusing on 2023 and 24, what are 2 or 3 of the things you'd like to implement over the next 12 to 36 months that I could begin helping you do that? That's a great future question. Or a fear question is, what are you most afraid of right now as a real estate professional, and how can I help? You can ask those same questions of a homeowner. I can ask a first-time home buyer, what are your fears in buying your first home, and how can I help make them go away? That's a great question. So that's what I would do. And I'd get all the business partnership, business reviews done. And then I would start meeting, either just mobile phone calls or FaceTime phone calls or Zoom phone calls. I would start talking to every one of those partners once a week. And there's questions in the High Trust Sales Academy workbook that are weekly questions that are derived and put together to generate referrals, to generate volume in business. And I would look to those questions, and I would start just making sure that, like, rhythmatically, let's turn the business from chaos into consistency. Let's put an operating system behind whatever it is we've done to this point. And let's get really focused on that. And I guarantee you, if you had let's just pick 10. If you had 10 real estate agents or business partners that said, let's go, I'm ready. And each one of them, with your help, could produce 2 buyers a week to just have a combo with. The dashboard in coaching, right? The call relationship to triggered loans and then approvals and closings. But if you had 10 giving you 2 a week, you'd have 80 borrower conversations a month. And there's 80 people out there right now that need a conversation with a top mortgage advisor and in your market. And if 25% of those wanted to do a deal and buy a home now, it was 20 loans a month, you'd crush it. You'd absolutely crush it. And everybody else is walking around thinking, oh my gosh, the sky is falling. Did you see what happened to rates? Rates went up a full percentage point in the last 60 days. The last 30 days, a full percentage point. How are we going to compete? Value. Doesn't matter. Rates will come down someday in the future. Don't know when. But, we all know the cost of waiting, right? Here's the other thing I didn't say that I want to say, John. So last year, if you take a look at 2021, the appreciation across America, all cities, all counties, all in, was 17%. Okay. So the coastal markets and some of the high-end markets, 25, 28%.
Right.
But it all merged down to about 17 across the board. The forecast by NAR this year is between 3.5 and 4.5. So even if you buy now, even at an escalated price, you're still not going to lose. And short of any financial debacle, which I think we have enough stops in place, it may not feel like it right now, but enough stops in place to ever go back to where real estate values plummet. Why not now? And why not you? Right. And, anybody that bought last year, if there was a reversal on valuation and you lose a little bit equity, how much equity did you make in your first 12 months of home ownership? That if you're long-term, you're going to be in the home 10 years, it's not a big deal. So that perspective, I think, is really healthy as well. You got to know the market and you got to be able to talk intellectually about it. And some of these stats are really powerful.
Yeah. Build wealth with real estate. It's bullish. It's bullish. And it's going to remain that way. Oh man, Todd, I can't thank you enough for coming on and shedding light on just extremely important principles and just value adds within our community of real estate and mortgage.
It's a pleasure, man. It's an honor. Yeah, it's an honor to watch you win. And I know that watching you win, you're watching others win because you're standing in the gap and bringing value to them. And that's really what business is about. Stand in the gap, bring value to the people that you love, that you want to have trust-built relationships with forever. And, if you take the spotlight off you and you put it on the customer and you don't worry about getting, but you only focus on giving, it's almost impossible that you would ever fail in business. And so that would be what I say to everybody. And, come check us out at toddduncan.com and download these papers, sign up for Sales Mastery. And if you want to talk socially, it's Todd Duncan Official on all the platforms except Twitter, and that is Todd's Tweets. And we look forward to helping you win. And John, this has been an honor to be with you. I really appreciate it.
Todd, thanks again. Appreciate it. We'll see you soon.
Okay.